Recently, many SCHD ETF investors are starting to get concerned about the future of the beloved so-called king of all dividend growth ETFs. Now, this is because the ETF has completely underperformed the market year to date, and this is even with a nice sized dividend included. Investors are also concerned about the future dividend payouts for SCHD, as another dividend payment amount is to be announced coming very soon. But in this video, we are going to do a deep dive into SCHD's year-to-date performance, as well as the situation around the dividend payouts, and lastly, exactly what investors should potentially expect as far as dividend payouts for the rest of this year and beyond. Now stick around because we have a lot to go through. Right after you, please drop a like on this video and subscribe for more future content like this. So first thing first, SCHD, the Schwab US Dividend Equity ETF, underperformed S&P 500 year to date by quite a lot. Now even like I said earlier, with the metric total return, which is price return plus dividends included, year to date so far, SCHD has a minus 0.75% return, where the S&P has a 15.09% return. Now, of course, it's only fair to look on multiple different time frames. Like for example, on the last year, SCHD is about flat and S&P is up only 5.69%. And on the last 3 years, SCHD's total return has absolutely destroyed that of the S&P 500, with an almost 42% return next to a 28% return. And on the 5-year time frame, same thing there. SCHD outperformed S&P by quite a bit. So I think it's safe to say before we move any further, let's dig a little bit deeper into this ETF, see how it works and what it has to offer. Now this ETF strategy and objective is pretty straightforward. The investment seeks to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, the fund generally invests in stocks that are included in this index. The index is designed to measure the performance of high dividend yielding stocks issued by U.S. companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers. Based on financial ratios, the fund will invest at least 90% of its net assets into stocks. Now, some more highlights about this ETF: a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on quality and sustainable dividends, and invests in stocks selected for fundamental strength relative to its peers based on financial ratios. So what in the world is going on with SCHD and why has it been underperforming the market as of so far year to date? Well, the main culprit obviously is the holding breakdown. Now with SCHD being made up of industrials at 18%, healthcare at 16%, financials at 14.8%. Financials at 14.8% is definitely going to be very important because financials have had a very rough start to the year. And when you take into consideration that this fund is made up of almost 15% of financials, it starts to paint more of a picture. But consumer defensive at 12.6%, technology at 12.54%. Also, technology being only 12.5% is going to be partially another reason on why SCHD has underperformed the market. Because after all, the Schwab US Large Cap Growth ETF, maybe you could even call it SCHD's brother, this ETF has 45.64% technology, and so far year to date, as you can see, this ETF is absolutely crushing it, up 34.56% year to date, just price return alone. So because of the overall holding breakdown within the SCHD ETF and some of the top names like Amgen, Cisco, Broadcom, Home Depot, and others, some of these names just really haven't been performing so well as far as year to date. But like I said a second ago, just wait 1 second, that does not by any means mean that they haven't been performing well over the past few years. But to understand better on why SCHD might be performing differently this last year compared to previous years, you have to understand that SCHD does go through a reconstitution on a yearly basis. Now, during the last reconstitution, which was earlier this year, SCHD had a total of 25 companies that were added. Names like AbbVie, Chevron, and IBM was the most prominent deletion though. And with the most recent reconstitution SCHD went under, there were multiple different companies that were either shifted around, added into the ETF, and also deleted from the ETF. Now, this is because SCHD tracks the Dow Jones US 100 Index. And with this strategy, selecting 100 US securities excluding REITs that initially pass the following screens. So the screens that SCHD ETF has is a minimum of 10 consecutive years of dividend payments, a minimum of 500 million float adjusted market capitalization, and a minimum of 2 million 3-month average daily trading volume. And if you happen to be more interested on the construction of SCHD, check out some of my other videos, I go over it in detail. But now let's get to the next point, or maybe the next fear that some SCHD long-term investors seem to have. A lot of investors are actually saying that the future dividends for SCHD could be going down. And although looking at the most recent payout data of June 26, 2023, this was a minus 5.6% change from the previous last year. And looking at pretty much every single dividend that was paid before that, you can see that the dividend is moving up and to the right, which is of course what gives SCHD the massive dividend growth rate. I think it's also important for investors to realize that SCHD's dividends do fluctuate. As you can see, historically, there's a few quarters throughout the year that normally move upwards, and then a few that might move down and then keep moving up. But over time, over the long term, SCHD's dividends have only gotten larger and larger historically speaking. Now, looking at this in more detail, you can see back in 2012, this ETF paid around 81 cents as far as total dividend payouts for the year. 2013, around 90 cents. 2014, $1.05 almost. 2015, $1.15, 125.8. And since then, we can see that SCHD's payouts have been going up and up and up until current day, where as of the last year, SCHD paid a total of $2.56 for the entirety of the year. But now let's head over to Twitter and see what some of the SCHD fans are predicting for future payouts for the rest of this year. So shout out to Dividend Breeder. They said, I've projected what SCHD dividends will look like for the rest of 2023. Let's check out the thread. They then said Charles Schwab never announces its SCHD dividend until a week before the payout, so we have a little bit more time ahead of us. But the annual increase estimate is lower than the 3-year average of plus 14% and the 10-year average of around 12%. I played this very conservatively because the year-to-date performance of SCHD and the fact that the most recent dividend in June came in lower than expected. So just like we talked about earlier, even though the most recent dividend payout was lower than expected, the previous many years of SCHD's dividends have been growing consistently. So next, let's look at the previous 6 dividend payouts. For March 2022, we had 52 cents, June 70 cents, September 64 cents, December 70 cents, March of this year 60 cents, June 66 cents, and then we have September and December, which we're waiting on. So the Dividend Breeder says that they're forecasting a lower growth rate of around 7 or 8% relative to past performance. So far, since SCHD has paid around $1.26, that would mean it's on pace for around $2.52 for this year. So of course, this is only an estimation, but the Dividend Breeder thinks that in September, we could see a 72-cent dividend, the range of around 70 to 74 cents, and then in December, around 78 cents per share, which gives a total for 2023 around $2.76, which I think that's pretty much in line with what I had in mind. But comment down below what you think. So where does this leave us dividend growth investors when it comes to the Schwab US Dividend Equity ETF? And is SCHD still a good buying opportunity? Well, obviously, historically speaking, this ETF has performed very well, has continued to pay more and more in dividends over time, and has returned a considerable amount of share appreciation. But what I personally think one of the major risks moving forward for the entire SCHD community, and of course the overall sentiment for investors, is if the dividends come in much less than expected, because that could definitely rile up the community and is most definitely really going to shoot down the dividend growth rate, which is one of the biggest selling points that this ETF has had so far. But I want to hear from you guys down below. Do you think there's still some massive growth ahead, or do you think that this dividend growth ETF is a dud and that dividend growth investors should move on? If you enjoyed this video, make sure to please drop a like on it and subscribe for more content like this in the future. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.